Tom Lee recently made an interesting point about the evolution of our financial system. He explains that when the US dollar it left the gold standard in 1971, it became what he terms a synthetic dollar. No longer tied to a rigid commodity, the dollar could expand freely, and that shift created the rails Wall Street used to build complex financial products that we know today: derivatives, futures, and vast credit markets. And the idea is this: when the foundation of money becomes more flexible, it opens the door to entirely new forms of financial engineering. That's the stage we're at right now with blockchain. If the fiat dollar was the rails for Wall Street in the 70s, blockchain is the new rail for the global markets today. Networks like the XRP Ledger give institutions the same kind of freedom, but with far greater speed, transparency, and programmability. And just like fiat-enabled derivatives, XRP Ledger enables tokenization of assets, stablecoin settlements, and programmable liquidity. In other words, the same forces that made Wall Street what it is today could be recreated, supercharged on the XRP Ledger and other such blockchains. And this isn't about replacing Wall Street. It's about building the next layer of financial infrastructure. Let me play this quick clip.
The synthetic dollar is what created the rails for Wall Street to build all their future products. The futures, curves, derivatives were all because the dollar was a synthetic product. If the dollar was backed by gold, Wall Street would be still a very small business. Well, Wall Street now is going to be building its entire infrastructure onto the blockchain.
Now, in this next clip, Tom Lee makes a clear distinction between Bitcoin and Ethereum. And this relates back in a really interesting way to XRP. So in his view, what he's saying here, Bitcoin is essentially digital gold, a global store of value. Its role is to function as a kind of decentralized, non-sovereign reserve asset. Ethereum, on the other hand, he sees as something entirely different. It's not just a currency, it's a programmable network. Ethereum provides the rails for stablecoins, RWA tokenization, and the foundation for decentralized financial infrastructure. And he argues that because of that, Ethereum could ultimately be far more valuable than Bitcoin, because it's not a store of value, it's not really a great currency, but it's a system. It is the rails that the future will be built on. And he says that is many times larger than simply just a currency. This is where things get interesting. The XRP Ledger, it really, if you understand it, it sits between those two worlds. Like Bitcoin, XRP, it's a sound currency, a fixed supply designed to be a reliable unit of account. But at the same time, much like Ethereum, XRP was built from day one to be a utility chain, enabling stablecoins, real-world tokenization, and a scalable global payment system. And in fact, it was the very first blockchain to have that functionality long before those terms became industry buzzwords. That's why XRP, it's uniquely positioned. It doesn't need to compete directly with Bitcoin for global currency narrative, and it doesn't need to copy Ethereum's programmable rails. Instead, it straddles both worlds and has a chance to capture value from both utility. It doesn't have to have all of it, but it can have a big chunk of both of those markets. This isn't a winner-take-all market. Different chains can excel in different areas, but what makes XRP particularly compelling is it may be one of the very few that naturally bridges those two categories: global money and financial infrastructure. Let me play the clip here.
So you don't really believe in Ethereum as a currency. You believe in it for other reasons.
That's right. Yeah, I think that the narrative of storing value is really Bitcoin's use case. Ethereum's use case is that it's actually going to be used and burned. So Ethereum gets consumed through gas fees, and then staking is how you produce an Ethereum. That inflation rate has been below Bitcoin, actually. So if you look at it as monetary supply, Bitcoin's monetary supply is actually still growing faster than Ethereum.
Now, we had a big breakthrough here. The Credentials Amendment is now live on the XRP Ledger. And this is a game changer. For the first time, XRP Ledger supports on-chain KYC and AML compliance without sacrificing user privacy. Here's how it works. Credentials are issued and validated on-chain. but the underlying documents, they never hit the ledger. Institutions can enforce that only verified participants can send or receive payments while protecting user data. This creates a compliance-ready, privacy-first foundation for the ledger. In plain English, this is the kind of infrastructure big institutions have been waiting for. If adoption was being held back by regulatory concerns, well, this is the thing that's going to unlock those. Now, this does not apply to general use of the ledger. We can all use the decentralized exchange. We can send payments. We can hold assets, and no one can say otherwise. It's just if we want to use a bank's specific services on the blockchain, well, then we have to go through their compliance checks and things like that. Same thing with Ripple. They can't do a lot of things on chain. They have to know who they're interacting with. So you still have the full decentralization of the XRP ledger, and we all can use it for that utility, but it gives financial institutions the safeguards they need to offer their services to their customers. It is literally the best of both worlds. Now, it's interesting. XRP isn't just winning in court, it's winning in the market. Time and time again, people say, when is XRP going to do something? XRP is up 400% in the last year compared to Bitcoin's 88% and Ethereum's 73%. The reasons are clear. Regulatory clarity. Now that the case is over, $1.4 billion in institutional flows. They can actually invest now that there's clarity. Adoption in corporate treasuries. Utility through RippleNet accessing 90 plus markets. Stable supply, meaning price growth is demand driven. And well accumulation, ETF speculation, XRP's history of being, just a dominant force, and that's going to continue. We are not where we want to be with XRP, you know that. But we haven't done nothing. Wasn't that long ago, XRP was priced in cents. Now it's priced in dollars. And in a short 12-month period, we've seen, big gains, and it's just the opening act. We look at Cardano. You look at Solana ain't at an all-time high. AVAX, you name it. This ain't top euphoria for the altcoin market. Our growth is ahead of us, and this is the perfect staging area for XRP. Now, you saw a Swift executive attacking Ripple and really XRP as well, but really what the problem is, it's not XRP. They don't care about that. It's Ripple payments. It's their service, their proprietary service. That's where the real tension is. Banks, they don't care how many XRP tokens Ripple holds. When we look at, contemporary networks, look how many Bitcoin Satoshi has, and MicroStrategies and BlackRock. And, that centralization is going to actually continue there. There's nothing you could do about that. Things of value, very rich people tend to try to, accumulate as much as they can. That's life. Ripple will actually have less XRP over time, and you'll probably see BlackRock and MicroStrategies acquiring more Bitcoin. We'll probably cross on a path here not too long down the road where XRP is much less centralized in terms of people owning, a singular entity owning the supply. We are trending the other way. But where banks and institutions do have a problem is the power that Ripple does with their proprietary software solutions. If you sign up to, side with Ripple, the software stack that sits above the XRP ledger, well, that makes Ripple your gatekeeper. Banks and institutions, they don't want a new gatekeeper. That's why you saw that executive from Swift saying the things he did. This is the banks pushing back. XRP itself is different. It's open. It's neutral. No one owns it. No one controls it. But Ripple payments, that's power. That proprietary software suite that stacks on top. And so the question is, are the big banks, are they going to bend the knee and just sign up and have to use Ripple software solutions? Possibly. But I think what will happen long term is for that global payment system, Ripple will spin it off. To some extent, they'll keep control over it, or at least, 10% ownership. But they'll let the major institutions, just like Swift is a consortium, where no one person owns it, they'll all buy into this, and this will be the future. And for Ripple, the company, that's going to make their XRP go flying up, because now this payment system is the global standard, and it's great for us, the XRP investor, as well. That's my opinion and how I think it will ultimately play out. Ripple will divest out of their payment system alone and let some of the big players invest in and make this a system that scales almost overnight when that happens. Now, lastly, NASDAQ, they're tightening their rules on these crypto treasury companies. We see them popping up every day, trying to be the micro strategies of XRP or the micro strategies of Ethereum or the micro strategies of Solana. And NASDAQ's seeing this and they are getting uneasy with all of this. And NASDAQ is tightening its rules on companies that are holding Bitcoin, Ethereum as part of their balance sheets. From now on, exchanges will delay approvals and demand deeper disclosures from firms using crypto holdings to boost valuations. Translation is no more free rides for companies that are inflating their net worth with Bitcoin or Ethereum. They don't want to just start a hype cycle out here. Yeah, you have some crypto on your balance sheet. That doesn't overcome your bad business, right? It's a tool. It's not the be all end all. We saw this in the .com bubble where people just named their company something that sounded like the internet and they went up in value. They're trying to stop that. They're trying to really make them disclose the reality of what's going on here. And I actually think it's a good thing because I think these crypto treasury companies are getting out of control. I don't think they're that imaginative, and I don't think they're using crypto to its best and highest use. We want to use these as tools. And one use case, of course, is keeping some of your treasury in a global currency, giving yourself diversification from regional risks, things like that. That's great. That is a valid use case of crypto. But beyond that, payments, RWAs, like we want people dipping in here and going out there and changing the world with the utility functions of crypto. That's what matters. And that's what we want people leaning in here, not borrowing money to buy crypto and somehow that's going to make the value go up. It's kind of silly, kind of ridiculous. And I think it's really risky. And it's good NASDAQ's getting out ahead of this before it's too late. It's the final week of Ledger's deal. You buy a Ledger device, the qualifying ones. You get some Bitcoin back. If you need a device to secure your holdings, there's an affiliate link down below. Check it out. Helps out the channel. And they have some really good deals. Again, you buy their flagship model, you get $80 back in Bitcoin. And you can take that Bitcoin and you can roll it into XRP. You can roll it into FLR, whatever you like. Check it out. Again, link down below and in the pinned comment. Go get yourself a new hardware wallet and let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.